Happy New Year. We've got a real estate market update for you in Austin. I'm David Shapiro with the Shapiro Group. My colleague Lee Abraham is here as well. And we're going to dive right in with the number of active listings. And you can see on this chart that we had earlier this year as low as under 400 listings on the market. And then that ballooned to up to 2,600 in October. And it's creeping back down as we entered the holidays. And as of January 1st, when we pulled the stats, we only had 1,700 listings. And what does that mean? Well, when you take a look at the number of homes that have been selling, which has been down, and we'll look at that number in a minute here, but we are up to, I think, what was it, Lee? 5 months of inventory at one point?
Just at 5, yeah.
And now we're back down to 3.25 months of inventory. So certainly more than the half a month of inventory we had in the peak of the market earlier this, well, I keep saying earlier this year. It's already 2023. So not 2 days ago, but early 2022. So certainly things have changed since then. Still, there's more inventory, but not as much as there was in the fall.
I think one of the key things to note here is that the number of sales per month has stabilized over the past 3 months as the actual number of listings has reduced pretty dramatically. And so as a result of that combination, fairly steady sales, decreasing actual number of listings, you get a shrinking monthly housing inventory, which is what we show on the next slide.
Here you can see half a month of inventory all the way back in January of 2022. And now it peaked at about 5, and we're back down to 3.25 months of inventory. So, and for those of you that are not familiar with this term, what this means is that if no new homes hit the market, it would take 3.25 months to sell every single home that's currently actively listed based on the number of sales that are happening. So this is just a good indicator to give people an idea of what the velocity of the market is. So clearly the velocity was really high in the spring of 2022, where it was under a month of inventory, and that has decreased into the fall of 2022. And here in January, we're somewhere in between.
Yeah, I think one thing to keep in mind for all of the statistics in this update is the strong seasonality. We're just coming out of the holidays. We're recording here just a couple of days into January. And all of the numbers, basically the sales volume, the number of units, are down as would be expected with the holidays. And so we'll parse that out now as we go through the rest of the stats.
So you can see the number of sales per month down year over year. So this is the December numbers, and it's about equivalent to what it was last month. We were down about 50% as well. And so certainly less transactions happening than there were this time last year.
Right. And as you look at the month to month, you can see some of that consistency, even a slight uptick from the November figures to December, but still very modest sales pace as compared to the last few years, even in context of the last 5 years. Yeah, so David, as we forecasted on our last video, we actually are seeing a year-over-year price decrease now for our first report here in 2023. It's a marginal decrease, 3.7 year over year. Last month, if I remember correctly, we had a 4%, something like that, year over year increase. And so these modest fluctuations now as we turn the corner from 2022 to 2023, it's to be expected. It's what we forecasted, and I'll continue to forecast for the next few months. I think February, March, we'll likely see year-over-year decreases as well. Nothing dramatic is what I'm forecasting, but I think that there'll be some marginal decreases for the next couple of months.
Yeah, so this is the first big milestone, I would say, that we're passing here, Lee, right? The first time that we're seeing the year-over-year price decline, and that was from December 2021 to 2022. Now, if you look at the 2022 prices that we have, so now our year-over-year is contending with these really high prices that we had in the spring of last year. So that gives us a higher chance that we see year-over-year declines in the spring of 2023. So we're not anticipating anything too crazy, but we'll report the numbers as they come in.
Exactly. And so now we are not looking at price appreciation from a traditional trend line standpoint, but it's more hyper specific on the peak market, the historically strong seller's market, comparatively speaking, and with the soft demand that we've seen recently, inevitably we're going to have some year-over-year reductions now.
And so here we have how long it's taking properties to sell. So this is up 116% from this time last year, which is a shocking number. And we went through this again last month. We had similar numbers, but just historically, we show you, going back to 2018, it was a strong seller's market, 51 days on market. So we're in line with that. We're still not at some crazy high number that we haven't seen before. The spring will show kind of what's going to happen here in the market. People are asking, what should we expect in 2023? And I think, we're just 1 week into the year and we don't really have a good sense yet, but we should here in the next couple weeks. And so I anticipate if you haven't subscribed to our channel, because our February update, we're going to have a lot more info for you on what we're seeing in the market now that we've gotten out of the holidays.
Yeah, exactly. I think that the next 6 weeks really will be the litmus test for the balance of the year. So looking at the number of new listings, David, this is really when the focus on the fundamentals, to me, pays off. You have a softening market. That means that supply is outpacing demand. And the basic equation there is the listing inventory going up or down? So we've looked at two different ways to measure listing inventory. The actual number of listings is going down, and the monthly housing inventory, which is the interaction between the number of listings and the number of sales, is going down. When you have a decreasing listing inventory, fundamentally, it puts upward pressure on pricing. Fundamentally. Now, we know that the demand varies as well. Demand drops and impacts the prices in a negative way. These number of new listings is a key fundamental, as a drop supports value. In other words, it puts upward pressure on pricing, which is very good for our market as we get into the first quarter. And I'm really, looking at how this is going to play out, like I said, over the next 6 weeks. Are we going to get a big influx of new listings? And as we look at some of the additional stats, particularly expired listings, you're going to see some really interesting dynamics in the next few stats that we show here.
Wow, Lee. So you can see 130% increase month over month, huge jump. And that could be shocking, except for if you look back, it looks like that's happened at the end of every year. And so listing agents probably just set their listing agreements to end at the end of the year. It's kind of a common thing because year over year, we're actually down slightly from the expired listings we saw last year.
Clearing out the clutter and setting the table for a more efficient marketplace with fewer listings into January, February now that we're looking at.
Now we have the sales price to list price ratio, and this is just an interesting number to track. You can see month over month, it's basically flat, but from last year, it's down, which you would expect because last fall, the market was still fire hot. And this fall, we saw an increase in interest rates and a decrease in buyer demand. And so therefore, it would make sense that properties are not selling for over asking the way they were last year.
Yeah, and we've talked about this being the voodoo statistic, the real abstract number in the array of data points. To me, it's a reflection of market sentiment, comparatively speaking, and really that's where it has value. And 96% sale price list price ratio is compared to the high back in April of 2021 of 12% over list. Just reflects the softening sentiment that we're experiencing in the market.
And we have our proprietary, can we call it proprietary?
We could.
Is there a better term? Rarely seen other place.
This is the only place I've seen it, David. And to me, it's the truth. It's the answer. It's the bottom line. It's what's happening in our market. And why don't you break it down for us?
The listing inventory barometer. All right, so let's dive in and kind of explain what this is. So here's the 100% mark. So if on a week, so like these weeks here, this means there's basically the same number of listings as there were the same number of homes that sold. The magical 100% line is where the same number of listings as there were properties that went under contract or went pending. So we have pending sales. And so you can see what it was like this is the spring here of 2022. So it was kind of a mix, but for the most part, we were selling more homes than we were listing. And then over the summer, interest rates went up, and now all of a sudden we have more listings than we have sales. There was a period here where it started to come back down. Actually, at this point, listings are still increasing faster than sales, but the rate at which it was happening deaccelerated, right? So still all the way
Right.
through until this week right here in November was the first week since April where we actually sold more homes than we had
Right.
listed. And then
Right.
that reversed course. And then all of a sudden now 4 out of the last 5 weeks, we've actually sold more homes than listings have come to the market, meaning that our
Right.
inventory is decreasing, and we showed you those numbers earlier. So this is our week by week chart of that, so you can see exactly what's happening. And this is a really great real time thing. So if you're thinking about buying, you're thinking about selling, we had a seller reach out yesterday that we're going to be selling his property in a couple months. And it was like, let's get you on this distribution so you can have a real time barometer of what's happening in the market as we decide what we're going to list your property for, the timing of that, everything that's going into that to try to get them the highest price. So if you want to have a conversation like that with us, go down in the description, click the Calendly link, and you can book a call directly with Lee or I, and we'll talk about your goals and we can come up with a strategy for you.
Again, from a fundamental standpoint, just looking at supply and demand, what's happening here, clearly the holiday seasonality dampens, as we mentioned earlier, the number of transactions, number of new listings coming to the market, and to a lesser degree, the number of buyers that are out there. But what this is showing me is that the fundamentals are sound in Austin. We have all of the macroeconomics and rising interest rates, but the bottom line is that even though sales were down over the holidays, demand outpaced supply. And that's good news for our sellers that are looking to maximize their net gain on the sale of their home. And, those are the folks that are most nervous. Those are the folks we're talking to now about, my gosh, I'd really like to sell, but is it a bad idea? And we walk people through. So just focus on the fundamentals.
Okay, so let's talk about what's happening outside of the city limits. So everything we talked about up until now was within Austin's city limits. And so here we got a lot of the same stats, but for the suburbs. And so you can see the months of inventory is just under 4 months. We've got about 1,600 sales per month. So there's more sales, about 3 times as many sales that happen outside of the city as that happen within the city. You can see that the number of sales, again, down from last year, not down as much as within the city, only down 30% versus 50%. And month to month, it's actually up 10%.
Right.
And then the average sale price, here we go. Again, first year over year decline.
Right.
Well, actually, technically last month, it was a year over year decline in outside of Salinas, but just barely from 500 to 1,000 to 500,000. But here we have a more significant decline as it's down 3.8%. And the number of days to sell, it's a little bit longer outside of the city. This is kind of a standard thing, and why my thesis is always like stick to Austin if you can. I mean, there's obviously reasons to go outside the city limits, cost of living, if you're buying for a place to live. Maybe you have a thesis that you think it will be a better investment as an investor. And you can see that going back to 2018, just like we looked at, we're still below where it has been in the past and how long it takes to sell a property outside of the city limits.
One of the things to keep in mind, it's a little bit of a nuance and a subtlety, is that the outlying areas, to your point, typically don't have the strong demand in volatile, rapidly changing markets. However, they do offer opportunities where the revenue, particularly on buy and hold income properties, the relationship, or what we call the gross rent multiplier, the amount of revenue that a particular property can generate relative to its value, oftentimes is stronger in the outlying community. So oftentimes you're trading the appreciation to receive the cash flow. And so just something we can talk about if you're considering investing, whether as an owner occupant or building your portfolio in the outlying areas.
Yeah, that's a good point, Lee. I mean, I've often talked about cash flow versus appreciating markets, and you kind of have to take your pick. You got fortunate if you bought in Austin maybe 12 years ago, coming out of the great financial crisis, you got a little bit of both, but that didn't last very long. So most markets, you think of your urban centers, like an LA, a New York, they tend to be appreciating markets with very little cash flow. So buyers that are coming to us looking for cash flow, and I know you had a buyer you talked to very recently that reached out, Lee, that wanted cash flow, and kind of talking through, okay, what does that look like in Austin, and giving people a realistic idea of what they can expect from cash flow, and then talk about appreciation, because Austin has seen on average somewhere in, it depends how you run the numbers, but around an 8% per year since the great financial crisis. So even if you include that, like we were only down, single family homes in Austin were only down 4% in the great financial crisis, which is the 2008 to 2010 period. So down 4% in the biggest housing bust of the boom and bust of our generation. I hope, right? Hopefully this isn't even a bigger one coming here. We don't expect it to be. I think I haven't seen a single expert that has forecasted that. So we're not anticipating that. But certainly down 4% for single family homes year over year was a pretty small decline for a market in the 2008 era.
So as we look at new listings coming to the market, the outlying areas outside the city limits follows the same pattern that we've been seeing in town. The number of new listings year over year are down just over 6%. Month to month, no shocker, down 23+%. It's in alignment with the fundamentals we've been discussing, and no surprises here.
Expired listings, so same thing we saw within the city, that they're up huge from November to December, but that's just a function of human nature and listing agents putting their expiration date at the end of the year. And so there you have it for that. Year over year, it's up 16%. So that's, decently, if you look back over the last couple of years, that's a bit significant. It's not nothing. So outside the city limits, seeing more of an effect from the current market conditions in that regard. And then the sale price versus list price ratio. Lee, do you want to talk about this?
Yeah, sell price, list price ratio is very, very close to the in-town number, just over 96%. It's interesting to note, David, that the peak of the fervor of bidding wars was a little bit less enthusiastic outlying in the outside the city limits. Looks like it peaked at about 108% in April of 2021, several points lower than in town. But yet we're landing at the same spot now in the first month of 2023, just over 96%. So that it's in line with what we've seen, and it's reflecting the market sentiment. You'll notice there's a tiny little uptick as compared to the previous month, just kind of showing some stability in these volatile times. And again, no surprises.
Thanks for joining us on our January 2023 market update. If you want to chat with us more about buying or selling, go down and shoot us a message, schedule a call directly with us. We'd love to chat with you and hear more about your real estate goals, talk about a strategy for you. And, if you're wondering kind of what we're seeing out in the market, so far things are a little bit quiet in January on our end, but we anticipate things are going to start picking up here real soon as people get back to work, get towards their 2023 goals. Maybe they missed out on buying in 2022 or 2021, and they're like, hey, this is going to be the year, especially if they're savvy and they realize that high interest rates causes fear for buyers, and it's pushed a lot of other buyers out of the picture. One of the things that I find a bit paradoxical or maybe ironic is all of the buyers in 2021 and 2020, early 2022 that were like, I really want to buy a home, but it's too crazy. I can't buy a home. And then all of a sudden it calms down. They're like, well, I can't buy a home because what if prices go down farther? But that's what you wanted. You wanted prices to come down. You wanted the market to change so you could have an opportunity to buy. And this is your opportunity. And we don't know how long it's going to last. It could, be over in a couple months. It could go for another year or so. And I think the opportunity is really around the timing for you. If it's the right time for your lifestyle to go buy a home, then start putting the wheels in motion to do that. It doesn't mean you have to go do it, but at least start the ball rolling and seeing if you can make it work and if it makes sense for you. If it doesn't, no worries. You can always put it off another year and wait until the market's crazy again. No, you don't want to do that. Don't wait until the market's crazy again. But hopefully before that happens, which it will at some point, because there's just not enough supply. The number of homes in Austin, based on the organic demand that's out there or wants to come to Austin, it's just, there's a mismatch there. So make sure that you get an opportunity to get into the market and buy in the next, however long it is before things turn around.
We remain steadfast to buy on fear. We believe in Austin's fundamentals. We're showing you the most current stats, and we're not seeing anything to change our forecast.
We're bullish on Austin long term, and almost everybody we talk to feels the same way. So there's a lot of really positive sentiment, positive feeling around Austin in the long term. And it's just a matter of this little bit of a hurdle that we have with high interest rates and sentiment around fear in the near term. So thank you for watching. If you haven't subscribed yet, go down and follow us. Please like the video so you can help other people find it. Leave a comment if you'd like. We've responded to most of those, and we look forward to seeing you on our next video.